'Cause I'm back. I'm back in the saddle again. And I'm back. Yes, indeed, I'm back in the saddle again. And I missed you. I'm telling you, I did. 'Cause I will always love you. Ooh, stop singing. You're ruining the video. I know you're excited to be back. I am excited to be back with you, my best friend in stocks, options, and dividends. And I wanted to check in here live. It is Monday, April 3rd, 2023, 10:07 a.m. on the Swatch Watch. Had a lovely week in Cabo San Lucas, Mexico, Pueblo Bonito Sunset Resort. It was phenomenal. It really was. Weather was great. Had a little ATV adventure, me and the boys on the trip. Went whale watching on a big, huge yacht. It was really nice, and then had basically perfect weather during the entire week. But I did miss you. I did miss the long form videos that I prefer. I way prefer them over the short YouTube 1 minute videos that I try to cram my thoughts into 1 minute. It's just not happening. This doesn't happen very well. So I wanted to check in, see what we're doing today. First things first, I was looking at this ABBV right there. We got 2 contracts that expire Friday, and it's a 160 call. And ABBV is already hovering around the 160, and I don't necessarily. It's currently at 159.80. Okay, and we've got a 160 call. I don't really want to get rid of those ABBV shares. I would at 160, but I thought if we looked at possibly rolling that for a little bit of premium now, and then also spinning the wheel of fortune so that we can collect the next dividend, because it is coming up soon. And since we've come this far, as my brother said one time during a softball tournament, we've come this far, we may as well win it. So we've come this far with ABBV, and we enjoyed the last round of dividends. How about another round, please? Set them up, bartender. Get us another round. So if we look down here, and this is on seekingalpha.com, we plugged in the ABBV ticker symbol, and we're looking at dividends. They have an ex-dividend date of 4/13, so that is just next week. We may as well try to stick around for that dividend as well. So we just need to roll out a couple of weeks in order to collect another dividend, but we want to be able to do it and not pay any money. I'd like to collect a premium, because if we look at this dividend amount, okay, so the dividend is going to be $1.48 per share, and we have 200 shares. Okay, so 200, multiply that by $1.48. We may as well try to stick around for that additional $296, and then also see if we can't collect a little premium on top of it. So let's take a look at it now. Let's roll this position and see how far we have to go out. So we have 2 contracts. We'll put those in. See what they show as a debit to roll. So if we roll this position, it's showing a $1.09 debit right there. So ABBV ticking up as we speak, a $1.09 debit. And we want to be able to capture that dividend and collect premium. So even if we rolled it to the same strike price just a week out, we can collect a couple dollar bills, right? Just under $70 bills and that dividend. But I thought, let's see if we can get that up, because we don't necessarily want to sell ABBV. I mean, we would allow it to be taken away at 160 if push came to shove, but let's look out 25 days to April 25th and look at the same number. So there we go at the 160 strike. We'd collect $330 minus the 109, okay, that we would have there. So if we click through that, it would show that we would collect a total of $444 bills, y'all, today. Okay, 444 plus the 296 would be $740, and we would extend it 25 days. So that's, $740 on what, 32,000. So it would be, because it'd be 160 times 2, right, times 100. So that'd be $32,000. But this would be in under 30 days. So in 25 days time, I hope I'm making sense. If we extend our ownership out at least another 25 days and we do the math, so it'd be $740 divided by 32,000. Okay, so that's not going to show a big number, 2%, right? But then we would divide it by the number of days, divide it by 25, and then we would then multiply our equation by 365 days. And that's that fantasy math that I like. You do like Fantasy Island, don't you? I like Dividend and Options Premium Fantasy Island. The math is at least half the excitement for me. So we look at 33.7% return on our money, given the exact scenario in this type of trade. And then it's extrapolated over an entire year, because that number, of course, is typically, it is fantasy land, but it also is reasonable because we're able to make that move right now, right here and right now, correct? So if we look at that move, we want to keep Abbvie if possible, but we'll let it go. We'll let it go at 160 if we have to, and then collect another 700 and some dollar bills for doing so. So let's see if we can't get it done. If we can't get it done, let's see what we have to go down to fill it. Can we go to 219 and have a medium? Yeah, we could have a medium likelihood of filling at 219 and then collecting $438 right here, right now in the premium, right? And let's see if that fills. It doesn't have to necessarily fill this very second, but we can come back to it. Take a look at what else we might be up to. Let's look at SPY because I missed my opportunity. I was out, we were at the gym, and then I got my car washed afterwards, and that would have been the time to enter a call credit spread when it was over $411 a share. I missed that. I did. I missed it. That would have been perfect. So we're down to 408.58. I mean, there might be some reasonable action on the put side, but with the way things have been going, I prefer the call side of the credit spreads. Let's look at what we would have to do on either side. On either side, let's see if those ABBVs are still pending. They are. We might have to come back to that and adjust it, and we'll be willing to do so. If we look at SPY and we go to trade a 0-day expiration, trade SPY option and sell call, and that would be today, April 3rd. What would we have to do to collect any type of reasonable, so we can still get in on this 412, and then if we went $2 wide to 414, we would collect about $4. So we'd have to do about 10 contracts to have anything reasonable. Now, if we look on the put side, if we sold a put and then we went down into the 90s on the put, see, I wouldn't feel comfortable at 405 with the way that SPY is trending at the moment. So you'd have to go down to 404 and then try a 404, 402, and that would only create about a $3 spread, $3 credit. So the call side would still be more attractive. We'll take a look at it now. All right, so on the next uptrend, if we can possibly get that into the mid 409s, which is possible because it is trying to trend up a little bit now. If it can bounce back up to the mid 409, so like 409.50-ish, then we'll look at the call side again and go to like 412, 414. So let's come back and do that in just a few, but I just wanted to tell you I did miss you very much last week. I'm happy to be back in the saddle again with you, my best friend in stocks, options, and dividends, and I'll see you in the next video.